everyone, and welcome back to SALTovation. For those who have been waiting with bated breath for part 2 of our FAQ, wait no further. Here we are, Meredith, Judy, and Stacey to kind of talk through some of our frequently asked questions. And, if you hadn't heard and you missed our introduction, we are now members of the Aprio advisory group. And so we are happy to kind of still be educating the masses with our casual conversations here on the SALTovation channels, all the things. And right, as you know, we like to hear ourselves talk because we're incredibly intelligent and smart and we love what we do. And so...
And maybe we've seen a thing or two.
That's right. 100, we're at like 60, 80, 90 years.
Yeah, I'm not sure anybody needs to know that.
Between the three of us?
Well, that's what I mean.
Am I here?
We're starting to...
At least 60, which is impossible because I'm still 27.
There might be some aesthetics involved and some hair coloring involved. So,
Right. So here we are.
I only date myself to they key punched, and I did show up to a tower at my desk.
Yeah.
I did. I just stopped key punching returns. That's how antiquated I am.
Yeah, there's probably a lot of listeners that don't know what that is. So there you go.
It's like a rotary phone. What's a rotary phone?
So, Judy, taking us back, right? One of the first things you and I did together when we were kind of trying to get our name out there from a SALTovation state tax perspective is we wrote an article about that it's very expensive to be non-compliant when it comes to sales tax. And we made up this goofy little story, but kind of talked through some of those things to think about. But I'd love to hear from you ladies how being non-compliant from a state tax perspective can hurt you. And then what can the state actually do if they kind of find out you're non-compliant or you're not staying up to date with filings and all of the things. So let's start with just not doing the right stuff and what can happen.
We had an office in Utah, and one of the Utah office clients was a distributor of wedding gowns. And they got those wedding gowns, from, China or some other, foreign country, brought them into Salt Lake City, and then distributed them out to various bridal boutiques across the country. And they had not been filing or collecting or doing anything with the state of Washington. Of course, they were selling to a boutique. So those were, sales for resale. However, the state of Washington also has the B&O tax. And they were selling to these boutiques in Washington. And one of the Washington auditors happened to go bridal gown shopping with her soon-to-be daughter-in-law and looked at the label and saw, like, oh, I don't know if this company's registered in the state of Washington. And so she went back on Monday or whatever and looked them up. Sure enough, they were not registered with the state of Washington for anything. So that created an audit. And unfortunately, Washington has a 39% statutory penalty, up to 39% statutory penalty for not filing, not paying. All of those waterfall kind of penalties add up to 39% and it's statutory. And so they got hit pretty hard. Mostly on B&O, as I said, because it was, those were sales for resale, but they didn't have certs. They didn't have any of those items. And so that really is just, I think, a very cautionary tale for taxpayers to understand that selling into a jurisdiction, even though you might think that, well, it's all sales for resale, I don't have an issue. There are a lot of issues that can come out of just those kind of sales alone.
Well, think about the B&O tax, which maybe our audience knows, maybe it does. It's a business and occupation tax. It's a gross receipts tax on receipts earned in Washington. How do you source the receipt to Washington? Well, you gave it to the boutique. That's the taxable B&O sale. And that's just like a gross income tax kind of on the company because they don't have an individual income tax in Washington. So we don't have the same state structure. Every state doesn't do the same kind of taxing. So that's another problem. For whatever political reasons, they've set up their infrastructure to have different types of taxes. So we don't have apples to apples across America, and Washington's known for apples. But so there's different types of taxes in each state. And I think companies don't realize they want to do one size fits all. Whatever Utah's doing, I'm going to ignore what I'm doing. And we find a lot of entrepreneurs have started a great idea, software, low barriers to entry. You just put it out there. A couple people buy it. You can sell more and more of it. That's on the internet. Where do you source that? So I think the barriers to sales and service and being an entrepreneur in America are very low, but the tax compliance is very high. And people don't take the time and effort to really understand that. And then they owe a lot of money. And we can't always get them out of that. And if it's not material, $500,000 to $1 million, you can't go to court to save yourself on that. You're going to get backed into a corner to pay penalties and interest. And it's just a lot of costs of doing business. And it can put people out of business. What's the point of that?
I think there's the basic just kind of, if you don't file on time or if you fail to file and you get caught, there's just penalties and interest, right? So just kind of at a fundamental level, you don't do what you're supposed to do, you get hit with penalty. You don't pay tax when you're supposed to, you pay interest on the tax until you pay it. But then I've seen here recently, states have gone very quickly to putting a hold on your bank account or putting a lien on your account. There are some states that are very quick. They have we sent you the first letter, we gave you another month. We sent you the second letter, we gave you another month. We sent you the demand, and then now we're turning it over to collections in another month, and now we're putting a lien. And it's like, holy guacamole, in 5 months now I have a lien on my bank account. I have to figure out how to get it down. It's based on a Jeopardy assessment, which is, 99% of the time it's an estimated return based on some arbitrary number. So it's like you owe $3,000 of tax a month, plus penalties and interest. And you're like, but all of my sales were a sale for resale in Washington. And all of a sudden you're out a lot of money and you have to figure out. Yeah. And sometimes you don't even really realize it. Because, right, we're all still, there's a lot of companies that are still remote. We don't know where the mail goes. You've moved, right? So things aren't getting forwarded until all of a sudden you're like, wait a minute, the comptroller's office just took $50,000 from my bank account. What am I supposed to do with this? So then you have to go in, basically drop everything, file all the returns, kind of, some states you should pay the tax again, right? Some states, it's like, well, you already have my money, so then you'll refund me the delta. But when are you going to do that? It's just,
super time consuming. It's super time consuming for us to support them, for them to get the information. And sometimes they're just shut out. I mean, we had a recent one in Texas, right? They were just shut out. They couldn't do business in Texas, which is not what they want, because they want to sell their things in Texas.
And I had a client that, they were registered. They were late on some filings or missed some filings, whatever it was. Kind of the notices all start to look the same when you're kind of trying to catch your breath as a new business and whatever the reason. So I got a phone call and he was like, hey, they actually put a lien on my bank account that I pay my mortgage on. I'm not an officer. I didn't sign the registration. My name is nowhere near that other than I'm the contact person. But they somehow got his mortgage escrow account that they were going to put a lien on. Now, fortunately, and this was one of the lucky states, right? Because they had hey, we get the notification, funds are held for, 72 hours before they're released. So if you can get in touch with the state, give them their money, they can then call me, tell the bank not to pull the money and all of these things. But it's just this is my mortgage.
It is interesting. I don't think a lot of people thought. I mean, when I remember transitioning from Deloitte to a regional firm, and I got a lot of practitioners and tax preparers say, well, they can't get me. It's another state. And I thought, oh, that's interesting. Maybe they can't. And then I realized, oh, they can't. They can't. So I had to disprove that because I just expected they could and couldn't give the information to them. But you're right. They can lien. They can find all kinds of things. Mm-hmm. They can pronounce if they think you're out of compliance. They have a lot of power and control and can just take from you. And then you're in the position of having to defend, which is, I think it's better to be on the offense personally than to be on the defense. You should assert your position. That's what you're supposed to do. Tell the government what you're doing, and then they can just do their thing.
I think everybody probably understands this, but we're going to say it again. I mean, every state's a little different as to if whether they're going to enforce or not. So it's really hard. Sometimes we get the question, oh, well, what are the odds that this is going to happen in X state? Well, we don't have a crystal ball to know that, but we can tell you, our experience in, like a state of Texas, that they are very aggressive. They have all their systems pretty much tied together where it's, they will forfeit your right to transact business. They will show up at your business and lock the door, et cetera, right? They have a system and their systems they talk to each other. So not every state maybe is as sophisticated or as put together, but at the same time, they have the jurisdiction to do so.
Well, and in the old days, before you were like remote, right? But now actual physical brick and mortar retailers, they could come in and shut you down, like close you down for the day because you haven't paid some silly little tax that you may not have known it. They have a lot of authority. It's easier to get you if you're in state, but they have ways to get you if you're remote now. And especially since we've had a remote economy since COVID, especially. It's like the world has changed incrementally about where people can work. We're all from home right now, even though we have an office we could go to. Why would we go? So that's the shift that we've seen in the market. So certainly governments have to be able to enforce, and they can. And they always have been able to do, even before it was remote, which I didn't, I had to figure out how to prove that to some of my tax paying clients. They're like, well, they're not going to catch me, so I don't have to worry about it. I'm like, maybe they can't catch you, but that's not true. They can absolutely catch you. And we never can predict how quickly. Some people come in really worried, right? They've got a Jeopardy assessment. We're like, oh my God, the clock is ticking. But we usually know the government will give us a little pass if we call them right away, and then we can work through some things with them before they just shut it down. I mean, they take a long time before they close a business down, but it depends on where you are in the process. Like you were saying, Meredith, if they get the mail, if they don't get the mail, that's a huge problem with notification these days. And people's emails could be wrong. You could have the company the person who set up the account no longer with the company and no one's seeing an email. So we have a lot of issues about notifications that are being lost in this e-commerce world we have
So now that we've scared everyone into what can happen when you're not compliant, so when do I need to get a sales tax license? Let's just take a super far step back. Judy, you want to talk through thinking about when do I actually need to get a sales tax license?
Well, I mean, yeah, that's a really good. I mean, you certainly don't want to go license yourself in every state. I remember we had a client at Deloitte, Rhythms Net Connections, a telecom company, no longer in business, but their lawyer said, go get licenses everywhere because we're open for business. And I'm like, golly, you created all this compliance. You don't even have a sale in Vermont. So you don't have to do it because you're going to sell there. You have to, it may incremental burdens. So you have to look at your physical presence. You have to look at economic presence. Like, what do you plan to do? Who do you plan to be? And then how quickly do you have to comply? But most importantly, you need to set yourself up so you can get a license, because once you get the license, you have to file returns. So you can't just get a license and file nothing. And the returns are not easy to file in every state. They're wildly disparate because there's cities and counties, and some are state collected. We have Colorado home rules that can be done on the SUT system. So just understanding how you're going to comply should be the first question you have before you get a license. People get licenses and don't know how they're going to apply. So then you go, all right, well, I can comply. I can turn stuff off around the country, either with my POS system that's native, which has tax rates and rules, which is not very common, or I have to figure out a software company, which is where the market has really grown in that space for the add-on, the API, the connector. You can bolt onto your ERP and you can collect sales tax. But understanding what you're collecting tax on and where you're collecting it and why you're collecting it, those are the questions that I think a lot of businesses don't understand. So you have an office, you have a warehouse, you have goods and service, you travel to different reasons. That's why you do business. You're traipsing around the country, sealing, shaking hands, signing contracts. That used to be how the world worked. You're going door to door. That's a physical presence. So it could not just be employee, location, warehouse, inventory driven. It could be other things that you need to get licensed for. I think about Netflix when they used to have discs. I was one of the first subscribers, and that was my client at Deloitte, and we had to collect sales tax at the front door, where we have to do it now post Wayfair. But Wayfair had to do it because they had their discs sitting in my mailbox that they owned at my house. So they had Nexus due to physical presence, inventory. So I think everybody has a different way they do business and how they go to market and how you access what you do with them, whether you get a product to your door or whether you get access to something. What is it is the first question, is because it's one thing to have Nexus and have a duty to file something, but what is you going to file and how are you going to file? So we find that we try to get involved and know those questions at the outset. I think a lot of people jump in and over license themselves or under license themselves, and they just don't set themselves up for success for a tax compliance profile, especially from sales tax. And then certainly you have to marry that to income tax. So that was a long way around that question, I think. But I don't think it's a simple question, and you should really be asking an expert. before you go get a business license and a sales tax license. Someone I saw should just, this is what I would do. It's a 5-minute question for us, maybe a little bit more for the taxpayer to understand those issues. And I don't think people do understand that. Where you register from a Secretary of State purposes, you should be licensed there from a sales tax perspective.
Judy mentioned kind of one kind of important key factor. It's like, okay, so I'm ready to get a sales tax license. I know I have Nexus, and I need a method to put tax on my invoice and charge my customers. But what else do you need to consider or think about prior to actually like pulling the trigger on that registration?
I think rightly so. A lot of people are paying attention to where they're selling whatever it is that they're selling because they're familiar with Wayfair, right? It's been out there for however many years now. What are we? Almost 8 years now, going on 8 years. I know, hard to believe, but so it's out there and they're paying attention to it. They understand that concept, mostly, right? But I think what they're forgetting is that they could have created some kind of nexus trigger because they step foot in those jurisdictions. So it is really taking a step back and saying, okay, what other potential activities might have you had in that jurisdiction even before, exceeding maybe an economic nexus threshold? You cannot forget the physical presence aspect of it because that is going to control when, if there was a physical presence prior to any kind of economic nexus presence, then that physical presence is going to control. So then that could even change the answer as to how you might even move forward. It could be you're not registering because maybe it's not going to be a prospective registration, let alone maybe even, a registration that's maybe a little late per se. It could be you're going to want to do some other kind of remediation because of the fact that you've had Nexus for a longer period of time.
In 4 years, you need to do something. That's the truth. You can't be sitting out there and a lot of people for years when Wayfair hit wanted to do a prospective filings. And basically you have to tell the government the date you started doing business.
Yes.
And you have to sign under penalty of perjury. So you're really not supposed to lie. So you lie, if test on that form, you're the one who's holding yourself out and you're the one subject to audit. And we absolutely had lots of Wayfair audits post registration for late registrants. And it was very stressful. We thought it was asked and answered. And then we got looked back. And it was costly for the taxpayer and us to figure out what we did a couple years late before. So it is a big exercise that people want to get a quick answer to. And they need to be a little patient and gather up what they're doing so they can put a footprint together about like where they should file, right? Because it's incremental. Like I said, like that Rhythms Net connection, filing everywhere out of the gate. It's so much filing. They didn't make it as a business. So they overfiled. You do want to limit that cost and be mindful about how you're doing it and why you're doing it because it creates a ripple effect of lots of obligations. Property tax, income tax, payroll tax, crazy little tire taxes. I mean, we have a lot of little weird taxes on local levels and at the jurisdictional levels in America. And I think people don't realize like Philadelphia, San Francisco, Chicago, they have separate taxes that are incremental to that jurisdiction. If you're in those cities, you need to think about that additional consequence that a sales tax license could create at the state.
Right.
Because they find out.
Yeah, and our retail delivery fees, right? I mean, those aren't even technically taxes.
Right. Yes, they're not.
Well, and I think there's even just some logistical aspects to getting that license. It's like, okay, I have a license. I've implemented a software system, but like, who's now going to file the returns? Who's going to be responsible for it? Mm-hmm. The second you integrate a software, you're going to have a sales tax accrual. Who's going to reconcile my accounting thing so I don't keep having this giant accrual, right? Because sales tax is a balance sheet item, right? You collect cash and it's a liability that you create until you remit it to the state. So who's going to reconcile your books to do all those things? Who's going to file your returns? Who's going to monitor your Nexus to make sure that like you're doing all these things correctly? Where's the mail going to go? I know what information do I have to present to the state, right? We just talked about how corporate officers can be held liable, but they want your social security number, your home address, and some states your driver's license. Like there are just some logistical things that have to occur in order to physically get that piece of paper that will kind of, have other impacts on the way things happen. And I'm sorry to say, officer, you cannot file a sales tax registration without putting your social security number. That gone are the days where you could just file a paper return and not do it.
There's a lot more heightened scrutiny also because it's automated now. So they don't have
Correct.
like flexibility because you can't just like leave something blank and you can't advance. Everything's mandatory or not mandatory and you can't advance because everything's done online nowadays. So in the old days, we would just leave it blank and then we'd call them up and say, hey, we're going to say this bit day. And the government was cool with it because they're just processing licenses. They don't immediately look at that and go, that's a bad company. For all they know, you're brand new to the state. So we're the ones who know it and you know it. And that's where we want to manage that risk and that liability. And sometimes it's just better to get permission than it is to do some things. It can be very costly a few years later because once you set yourself up for a specific date, that's when the audit can go back from or start from, depending on your facts. And if you have filed a fraudulent registration, they can go back 6 years. At least.
Well, so what about those companies that are either that are selling a good at a trade show or they're hosting a live event, a concert, a production, a live training course that they're selling tickets to the public. So they're physically present, but they're going to come in for a few days, get set up, host their event, clean up, and then leave in 4 days or, sell at a booth. So do I really need to get a sales tax license?
Yeah.
Well, and I would say, yeah, I mean, it depends, I guess, on whether the promoter of, say, a conference, right? I mean, there's a lot of conferences that occur in Las Vegas, right? Las Vegas, Nevada knows how to deal with the sales tax that is collected, at an event, and they might be doing it on behalf of the vendors. But generally speaking, yeah, if a vendor's sitting there at a, even if it's for a few days, they could get a special events license. There could be, some kind of short-term license that maybe they could get if they're kind of in and out. But at the end of the day, they have a responsibility to collect and remit.
Right. I'm thinking about Eventbrite and some of those other vendors that create even event platforms so you could collect fees and get people to go, and then you pay them a commission. So it's like software, but also they're a marketplace effectively because they're a platform to collect money. And that's what a marketplace is often considered in most states. So if you're getting the money, then you have the duty to collect the tax. So, and then you might have to set yourself up as a vendor, and then you would have a vendor underneath you because you're the Eventbrite and you're putting on an event for some other vendor. So there's multiple licensure issues within the structure of how you set yourself up as a business. Thinking about okay, so let's just say that they manufacture the dresses, your Utah dress, wedding dress company. So they manufacture in Utah. Their beautiful dresses are very unique. So now you're a manufacturer, wholesaler, retailer, everybody's buying your dresses across the nation. So you make the dresses, you sell them yourself, and you sell them to other people. Well, if you sell them to other people and they're selling to other people, then you got to get licensed to get their certificate. Otherwise, you have a sale because you don't have an exempt sale if you're not licensed and you don't have a certificate. And I think a lot of people don't want to do that part of it, but it's a big deal. We have clients that sell wholesale and retail, and all of that gets reported to each government, all of it, not just the retail sales. So people don't understand they need to put all their business into each state on their reports each month. So we have a big disconnect between what people understand they're supposed to do operationally and what they're doing as a business.
Well, and what an amazing transition to one of the questions that we often get asked. And that is, what's the deal with exemption certificates? Why do I need them? Do they expire? When am I supposed to have one? When am I allowed to get one? They're hard to validate sometimes. People issue them incorrectly. So you have to, and then they get mad because you say this isn't valid. And so give us a brief kind of thought on exemption certificates.
Well, maybe we should say what an exemption certificate is not. The things that we've seen that are
Except
not.
in Colorado, it might soon be your not-for-profit state. What is it? You're from the IRS that we may accept that in lieu
Your
of a cert.
501c3
But anyway,
documentation.
There you
go.
501c3. They're looking to allow that.
I think one of the thing that I see the most is the license, from the state.
Right. Yeah.
That's great. Glad you're licensed.
Yeah.
But that's not sufficient.
Sometimes it is.
We've even had credit card statements.
Yeah, totally.
So there's some that are completely wrong, right? I mean, a license is maybe that's trying, but No, some states obviously are more strict than others with respect to what they will accept, whether it's their own state's form, which means then that vendor needs to be also registered in that state. So, or it could be a multi-jurisdictional form. It could be that it's, they will take other states' forms.
Yeah.
It really is just it runs the gamut. And it could be sales for resale. It could be direct pay permits. There's all sorts of different iterations of what is an exempt cert as well. So it's not one size fits all, which is kind of the typical answer when it comes to state.
And it's the bane of compliance, honestly. So people don't want to do it because they think, well, I don't owe any money. I don't need to collect any money. Why do I have to get the certificate? Well, because you got to collect the money if you don't get the documentation. That's the rule.
Yeah.
So you can't just assume it's exempt. And a lot of taxpayers do, especially a manufacturer selling to a retailer. They may not think, oh, why would I bother to get that little certificate? I'll just ship them the dresses. So we do find a lot of people really minimizing the importance of that function in their business to secure.
Yeah. And I think and I think sometimes they think, I'll just, I'll worry about that if I get audited. And the rule is that those documents need to be contemporaneous with the sale. So there are auditors that, depending upon how, nice they might be, they might allow the taxpayer to get those certs later, but, at the end of the day, they really should be contemporaneous with the sale. And so they really need to be on file and kept on file. And yes, some of them do expire.
Yeah, very few, but a few states do. Like there's
Florida
4 or 5 states.
Florida
You have
issues
to look
you a
at
new
the list.
certificate every year. Arizona issues you a new certificate every year.
Oh, nice memory.
There's a few others.
Yeah, there's a few out there.
Colorado, you have to renew it every 2 years and pay your $16.
2 years
So Colorado's another renewal.
I mean, it's really a best practice that they all renewed every year. It's kind of annoying that they don't conform. That's another question. Why the flip don't the states conform? Well, you can thank our founding fathers for setting up the Constitution to give states supremacy. So that's why they have their own tax laws and rules that we all get to deal with.
And then, with exemption certificates, there is a modicum of protection on behalf of the vendor if you're accepting this in good faith. But there are some components that, the state could specifically say this was not accepted in good faith, right? I don't believe California exempts charitable organizations. So if they can't give you a California certificate and they just give you your 501c3 designation from the IRS, that's not an exempt sale because California doesn't exempt those organizations. There's also kind of this push-pull where we work with a software company that does get a lot of exemption certificates, and it'll be a resale certificate, and it's like, but you are not a reseller of software. You're a manufacturing, and this is for websites. How is this a sale for resale or, just fundamentally how our product works? There's no way that you can resell it. So yes, it's a valid resale certificate, but not for our product. Is that accepting in good faith? What level of diligence do you have to do on this thing to be able to kind of save yourself from penalties? Now, you're still going to get charged the tax, right? If it's invalid, but you can, kind of argue penalties, penalty abatement on that fact. And then you would go back to your customer and be like, look, this is bad. So
you're just going to pay a lot of hot money to hire a lawyer to argue with the government. So now because you didn't get the right form, because you didn't make the effort to understand what your validation requirements are, which is your duty as a business. Sorry. And you got to get people like us involved. That's really expensive. So just if you did it right on the outset, you're golden. But there's this sort of non-compliance mentality that I'm not going to get caught and it's not going to be a problem for me. And that is, I think, we've got to shift that culture. The governments are figuring out who we are. They can figure out all this. I remember at Deloitte, I thought it was $30 million when a company was really kind of getting audited like crazy. They had a lot of critical mass. They advertised the heck out of themselves. They had a great website. They had physical presence all over the place. They had a great business plan. They had Nexus, right? But we have $2 million, $5 million, $10 million companies that have Nexus that don't think about it because our whole business format is about selling to people all over the place. They're open for business. And I think that's something people lack, the understanding that if I'm going to be open for business, I need to look at my duties in America. Even if I'm a federal income tax loss. You still have sales tax and other obligations at each state level.
Well, so then if I sell my business, what happens? Can I just be like, well, I don't care. I'm going to be out in a year. This will be someone else's problem. So
Yeah.
what happens with those
Yeah.
uncollected? What happens if I'm not compliant or I have outstanding liabilities? Does that stay with the business that I'm no longer a part of? Does that follow it? And like,
Well, if you have a stock sale, right, the liability goes with the purchaser. But a lot of people do asset sales to avoid that successor liability. But unfortunately for sales tax, successor liability issues follow the assets that are bought. So whether it's stock or asset, sales tax liability transitions to the buyer. So so then it becomes an escrow against the purchase price because there was a bunch of tax they didn't collect or documentation they didn't provide, and they're not licensed where they should be. They owe hundreds of thousands of dollars, maybe $1 million across the nation. And they're going to lose that money when they get sold because the buyer is not going to buy that responsibility based on their purchase price. They're going to lower the purchase price to account for that lack of responsibility for them because they're not going to take that buy. That's part of they're not buying that. You didn't fix it. Now they're going to not take it with them. That's what I've seen mostly. What about you, Stace?
Yeah, I would say that. And I mean, those items should come out in due diligence. They don't always.
No.
When I was in-house, the company I worked for had actually acquired a company before I started, and they did not realize that they had a big Ohio issue. And we, when I was in-house, we actually went back and got indemnified from the seller because of the fact that we had all this tax that was due to the state of Ohio that they hadn't cleaned up prior to when.
And nobody knew that on the buy side at your company. It's very interesting.
Yeah.
And I think a lot of times people know their own backyard. Yeah.
I mean, those things happen and there's a way to cure it, right? But no, those liabilities absolutely follow.
And what about the transaction in and of itself, right? You sold $100 million worth of stuff. Do you have to charge sales tax?
Mm-hmm.
Is that a taxable transaction?
Oh, to the buyer, right? Right. Depends on if it's inventory or if it's actually like you're buying furniture, fixture, and equipment. That would be a taxable sale in some states.
Right. And do you have a casual sale exemption? Do you not?
Colorado does not. Yeah. So an asset sale could be subject to Colorado sales tax.
Right. But don't have very clean, broad casual sale exemption.
And then you the LLC exemption, but I think that got overridden, because we would drop all the assets into an LLC and then buy the LLC interest. And I think some cities and places started to tax that. That was
they just kind of looked through that whole structure to say no, you're just trying to avoid tax that way.
So, unfortunately, we're kind of running out on time, so we haven't gotten to
we'll have to do another one.
Tax or unclaimed property or Secretary of State stuff, which we're not going to issue legal advice because that's an opportunity. That's Secretary of State generally is a legal advice. But all of that means is, why do I need SALT advice? Why do you need to call us? Why is it important? If you didn't listen to part 1 and you've turned it off after, our gab fest in the beginning, why is it just important?
Because we save people money. We cost less than we are a bargain. We actually save people a ton of money and mitigate all their risks. So
that's what I was going to say. We manage their risk. Mm-hmm. Yes.
And most companies, like Stacey was in-house for a period of years, right? In a pretty large company, they could justify having a human like her and multiple humans that did what she did. But most companies can't afford people like us full-time. And there's not full-time work to do. So we're better to help lots of companies and not just one, where we can provide advice across the gamut of industries, which I think is really great. So it makes it more efficient for the taxpayer because they can't possibly know what we know, just like we don't know how they run their businesses. Like, how do they come up with their idea? We could just implement the state foundation around that specific business unit and help you be successful. So we're just going to save you a ton of money is why I say it.
Well, and in that process too, helping the companies understand what it is that they actually sell.
Yeah.
Because, gone are the days of, selling. Yes, there's still plenty of product companies out there, but there's so many service companies that are online. And what is it that they're selling?
Well, I think about IT outsourcing. They do all kinds of stuff. They might buy the software for you. They might buy your equipment for you. and then they'll manage it for you. What is that?
Yeah.
They're muddling it. They're grouping together products and services. It becomes one fixed fee. They bundle bill. Governments come in and say, it's all taxable because we can't tell what isn't. So there's
Right.
just a lot of value add that people don't think to get us involved at the outset. How are you
Right.
going to do what you do? And then what is that going to create for your tax footprint? Yeah, that's why I think we provide a lot of value up front, in the middle, at the end. But we unfortunately end up getting a lot of work with people who have not been in compliance, and then we have a lot of risks that we're trying to mitigate for them. That's heartbreaking, actually, sometimes.
Yeah. I mean, there's definitely a reactionary component to what we do. A lot of times we prefer to be proactive, but
But we're a business expense, so you can deduct our services.
that's right. We're professional services.
That's right. We are taxable in a couple states, but right
That's
now
right.
we don't have customers in those states. So we're not exactly not taxable either in some states like South Dakota and Connecticut and maybe Hawaii. So there are a couple states that might tax what we do if we had customers there.
So thanks, Judy. Thanks, Stace. Thanks to all our listeners who held with us on our brief hiatus. We are back. We are ready to keep educating the masses
And introduce you, right? Lots of things we can do now that we can really help you with. It's just exciting for me.
and just more conversations about state and local tax. So buckle up, friends. And this has been another episode of SALTovation. Till next time.